Build back better. What's good, people? Welcome to April. I'm very excited to bring you this video because I see a lot of potential in these stock picks that I'm going to be talking about today. So definitely stick till the end because I have my favorite pick at the end and I'm going to dive into this very quickly. So Biden is introducing a $4 trillion infrastructure deal very soon. And this, an analysis that I have broken down for you takes that into account and how the country is going to be moving in the next 4 years with Biden's term. So without further ado, let's get straight into it. So at number one, I have some construction companies. So just to talk a little bit about Biden's deal. So here it says that plan would spend heavily on clean energy development and other high growth industries of the future like 5G telecommunications. It includes money for rural broadband, advanced training for millions of workers, 1 million affordable and energy efficient housing units. Documents suggest it would include nearly $1 trillion in spending on the construction of roads, bridges, rail lines, ports, and electric vehicle charging stations, and improvements to the electric grid and other parts of the power sector. So first of all, very huge there. So the first thing you can hear there is construction. So my first pick here is Caterpillar and Deere and Company. So these two companies are very heavily invested in the construction. I know Caterpillar, for example, they build a lot of machines that helps speed up and accelerate constructions of housing, building, and a bunch of other things. So when it comes to how these companies are going to go, you can definitely place a bet and say these companies are going to be getting a lot of contracts from the government in the next 4 years when it comes to how construction is going to be done in the United States for these things that they mentioned in the deal. So Deere and Company is also one of these companies that makes a lot of technologies focused on construction. Deere and Company has a focus on agriculture, which is a kind of a different sense and vibe of things, but also they create these manufacturing tools, which is going to be very necessary in the next 4 years as we build back better. Analyst recommendations for Caterpillar and Deere and Company are both sitting at buys. So we have Caterpillar sitting at a 2.6, which is between a hold and a buy. We have Deere and Company sitting at a 2.1, which is a buy. And if we look at the profit margins of both companies, Caterpillar is at a 7.18% profit margin and Deere and Company is 9.35. So these companies are relatively profitable. And then when we look at the quarterly growth, Caterpillar definitely took a hit in 2021 with negative 29%. And Deere and Company, actually very stunning numbers, 136.8% growth year over year. And then when we look at the average earnings per share estimate for 2022, we see that Caterpillar is supposed to be a 12.16 estimated growth from the 8.16 that they're currently at. So that's $4 per share growth between 2021 and 2022. And when we look at Deere and Company, it's sitting at currently today 15.72 earnings per share. But in 2022, it's estimated to have 18.72. So when we look at the big holders of these companies, so Caterpillar currently, Bill Gates is a very strong holder of Caterpillar. We have the S&P 500 and we have Vanguard also as very strong holders of this company. And when we look at Deere and Company, we have Vanguard, Blackrock, JP Morgan, and Bank of America as owners of shares in this company as well. Moving on to my next pick for you today, I have Nextera Energy, and this company is a clean energy company. They are currently based in Florida, but they happen to be the world's largest producer of wind and solar energy. And this company also focuses on large battery storage in the world. So this company definitely is going to be very good for Biden in the next 4 years in his term because there is a clear focus on clean energy. And this company has the potential to expand out of Florida into different states across the United States. So I'm not too knowledgeable about the energy industry, but I do know that there is a drastic shift in terms of the investment that's going to be happening in the next 4 years in this space. So the government will definitely pour a lot of money into contracts for these companies, and these companies are going to definitely see growth in their revenue in the next 4 years. So analysts currently have this company sitting at a buy. The average price target is $87, which is higher than it is currently today. This company currently operates with a 16% profit margin, so they're definitely nicer than the construction companies. that I just talked about. So like I said, again, the investments are definitely going to see growth in the revenue. So definitely do more due diligence into this company. But as we all know, clean energy is definitely the future. So if you're going to be investing in anything, definitely be investing there, because there's a clear shift in how the country is going to be moving when it comes to how energy usage will be moving forward. And a lot of construction deals now moving forward are going to be incentivized to build on renewable energy. So as we saw in Biden's plan, it said the next constructions to be happening. So the housing codes and the building codes that are going to be coming up very, very soon are going to have, mandations for companies to build with, in mind for solar panels and having, things like that, that kind of shift the trajectory of how we build into building and taking into account renewable energy. So definitely keep this in mind as you invest. So I want to move on to my next pick, which is Qualcomm and NVDA. So currently there is a shortage of semiconductors. One of the big reasons why is because a lot of automakers now are shifting into the electric vehicle space. And a lot of this also needs a lot of technology. So chips for things like self-driving and lane navigation and braking and having sensors, things like that require, chips in them, because it's technology based and they need to have computers kind of talking and interacting in order for it to work the way it does. And also 5G is going to be a huge focus in these two companies. So the government is currently looking to supporting the supply chain of semiconductors, which is very needed, again, like I said, for a lot of technology things that you need in the world. So cars, phones, like any toy you have that is able to connect to the internet, anything that kind of acts like a computer in a way, so needs a semiconductor. So this industry is definitely one to keep in mind, because it's kind of like the gold rush analogy that I talk about. So back in the gold rush time, so the companies that made a lot of money weren't the people going for the gold, it was the people supplying the people trying to find gold. So Levi's made a lot of money because they sold a lot of jeans. The people that sold pickaxes to people trying to find gold made a lot of money because regardless of whether or not they found gold, the person was able to make a profit from selling the materials that the other person needed to go find gold. So that's what's going on with this industry in the semiconductor, regardless of how EVs, kind of move, or whatever else, whatever industry trying to create any technology breakthroughs. It doesn't matter, because they need to have a semiconductor or chip inside of it for it to function in some way, shape, or form. So this is definitely a gold rush kind of scenario, where if you invested in semiconductor companies, you're bound to see growth in the next few years, especially now that the government is pouring a lot of money to help, kind of build this industry up. So Qualcomm is going to be a leader when it comes to 5G technology. And as we saw in Biden's plan, they're going to be focusing on building infrastructure for 5G technology. So you're going to be seeing a lot of towers very soon in different areas that support 5G. And we have NVIDIA that's, mainly dominating the semiconductor industry in the United States for the past couple of years now. Relatively expensive to buy a share in the company, but, it's definitely going to be worth it, and it's definitely going to grow. So, we saw a lot of slowdown when it comes to, semiconductors because of the electric vehicle, kind of drastic shift that's happened this past year. There is more demand for semiconductors from the electric vehicle space than ever before, and that kind of broke down the supply chain of semiconductors. So, if you invest in this company, it's pure supply and demand. There's high demand for something, so the price, what does that mean? Goes up. So this is where you should also pay attention to parking your money. Now, I want to bring you to my next two favorite picks of the night. So pay attention to these two that I'm going to be talking about. So first up, we have Square. So for people that have been sticking with me, you know that I love Square. Square is a company that I'm very bullish on. Square has two ecosystems. They have the seller's ecosystem, which works with a lot of small businesses. And they also have the Cash App ecosystem, which works with just the general public. So we have two ecosystems that kind of work in synthesis, or will be working closer in synthesis very soon. So we have what has happened in the past year after COVID-19 was there was a 3-year cash to digital acceleration. So in terms of how people spend money, cash isn't being used as much as it was before, and the projection for how that shift was going to happen changed drastically because a lot of people are using the internet to do a lot of transactions now. People are sending each other money through their phones. People are paying for stuff online. So that shift has happened a lot. And recently, Square saw a huge price pullback because of the huge, dip in the technology space and growth stocks because of bond yields going up. And also, we talked a little bit about the monthly active users for Square, which has been growing very, very fast recently. The cost of acquisition for each customer is less than $5. So the company is definitely in a great position moving forward. So Cash App has been one of the fastest growing, streams of their business line. And they've been growing very fast because of a lot of different acquisitions. They recently acquired Credit Karma, which is very good for, tax refunds and stuff like that. So that was something huge, Cash App. And also Square recently acquired a new bank, which is going to push them forward when it comes to financial technology. This company has always been trying to be the next banking system in the United States. And I think that they have a shot here, especially because they're combining the seller ecosystem with the spenders ecosystem when it comes to Cash App and people making transactions, because now you're able to own a debit card through Square. And now they have a bank where you're able to keep your money. They have direct deposits being able to set up to your account, tax refund deposits going to your account. So, it's starting to raise a question that, do you actually need to have a bank? So that's something that they're trying to change here. So definitely pay attention to this company. I think they're definitely a great company to be in the next couple years. So stay tuned for how they're going to continue to grow. I will have more videos on my channel, keep giving you updates about Square. I also have analysis on Square. If you go on my channel and take a look at some other videos that I've made about them, it shows a clearer picture of Square in a longer period of time. So I don't have to rush it here. So moving on to my final fifth pick today, we have Tesla. So recently I pulled a lot of my long-term assets into Tesla, and I'm going to break it down why I did this in a couple minutes. I think this company is going to make, a lot of huge transitions in the next couple years, and I think they're going to have a lot of breakthroughs when it comes to what they're going to change in the transportation system and the energy system in the United States. So also, we have Biden pouring a lot of money into these infrastructures for companies like this. So electric vehicles are going to see a lot of, charging stations being built around the United States, which has been one of the biggest drawbacks when it comes to people purchasing electric vehicles, because, people are like, oh, but I have to find, a charging station. What if there's not this and that? So that's going to be changing a lot. It's going to be more accessible to have charging stations. It's going to be, I'm not going to say it's going to be as easy as finding a gas station, but it's going to be definitely easier than it is now. So first things first is clean energy. So this whole 2020 that just passed and 2021, there has been a huge push when it comes to electric vehicle, because people have seen, climate change has been an issue, but also just the technology is becoming easier and cheaper. Tesla had a huge year in 2020, so it definitely put a lot of spotlight on this industry. So this is something to pay attention to, because, the United States and a bunch of other countries are trying to redirect how we are issuing climate change policies. So climate change is going to be very huge in the next 4 years in Biden's term. So there's definitely going to be a huge investment when it comes to clean energy, and the transportation system in the United States is very, very invested in automobiles, and that's where one source of climate change toxins are coming from. So this industry is going to see a lot of changes. A lot of car companies have pivoted into electric vehicles as well, not just because of Tesla, but also because of people being more aware of climate change and demanding better from these companies. So there's definitely going to be a huge burst for Tesla moving forward. I know the stock has grown a lot very recently, and people are very nervous about whether or not it's going to continue this run, but it definitely is, because it's very, very early. We haven't even quite seen what they're able to dip into yet. Moving on to my second point is the transportation system. So they are working a lot on the autonomous vehicle. So I forgot where I read this, but a couple years, I think a year ago, they were supposed to reach 6 billion miles when it comes to autonomous vehicle recordings of like statistics and data and mileage of driving, in order to capture enough data to show Congress that this was a viable option for people to use it. So that's one of the biggest things holding back this industry right now. Whether ethics is going to play is going to play a big role in whether or not it will be accepted. So this technology, it's a robot making decisions on how to drive. So there is a risk factor here, but the technology has been proven. There is proof of concept of Tesla driving very well, and having, very great safety when it comes to driving autonomously. So this is going to redesign the transportation system in the United States and a lot of countries across the world, because we're going to see changes in traffic. We're going to see changes in, the price of transportation, because it's going to be cheaper, not requiring a person to drive. Is going to have, less requirements for people to own vehicles in the future. But also because that these cars are electric vehicles, it's going to be cheaper to actually get from point A to point B. So there's going to be a transformation in this system. Tesla is definitely a company to keep an eye on. I moved all of my portfolio into Tesla this year, and I'm telling you this because I think this company is definitely going to see a lot of growth in the next couple of years. Kathy Woods, the CEO of ARK Invest, also doubled down, saying they are going to see a 4 or 5x in Tesla, and she predicts Tesla is going to be $4,000 by 2025. So definitely keep this company in mind. They're currently sitting around $600, so it's a good place to park your cash. If you're going to be saving, definitely put it in there rather than putting it in a savings account. So anyways, these were some stocks that I wanted to talk about for April. I think April is going to be a very, very huge month in 2021. We're going to be seeing a lot of changes when it comes to how people are going to be investing in the stock market. Also because the stock market has been very volatile very recently. So, and we're gearing up for the summer and a change in cycle. So definitely keep these companies in mind. And when Biden is to release that $4 trillion infrastructure deal, a lot of these things that I'm talking about are going to be priced in the market. So you definitely want to get in ahead of the market, because once it hits the news, then it's too late. So definitely keep these companies in mind. It was your boy Elijah bringing you some quick tips on some stocks to invest in and some finance tips. I have more breakdowns of these companies that I talked about on my channel, so definitely check it out if you're interested in any of them. So thanks for stopping by. I'll see you next time. Peace.